Hey guys, what's going on? It's Lewis here for a market update video. It has been quite a long time since my last video. I think it's been nearly a month. Yes, I got sick with the flu. It was not COVID, and I drastically injured my back. So couldn't really walk, couldn't really concentrate on anything. I've been going to physical therapy, but I am way better now, probably about 70% better on the back issue, and my flu and cold is gone, so I could concentrate. And so that is great. Also, I started studying something called order blocks and something along the lines of the ICP method or ICT method. And he's a trader who uses order blocks and price action to basically determine where his entries and exits are, and seems to work really well. I studied it for probably 20 hours and went to go back test it, and hasn't really worked out that well from the 10 times or 20 times that I went to go, back test the strategy. But I'm going to continue to refine it to possibly add that to my repertoire. But for now, I'm going to stick with what I know and what I do, because it really goes to show you that it doesn't matter what trading strategy you use, as long as it's a good one that you understand and you're profitable with it. So for me, I love the Fibonacci's. The Fib is my absolute favorite thing to use. So between support and resistance levels and then Fibonacci, those are the top two. And then of course I use the RSI and stochastic RSI along with the MACD in order to determine where I want to get in, where I want to get out, etc., etc. And then of course there's the candlesticks themselves, and the candlesticks should always come first. Price action should always come first, and then the indicators come after that. Those are my favorite things, but hopefully I could get the order blocks and the swing failure patterns and the breakers and all of that stuff down so that I could more accurately incorporate it into my trading strategy and get better entries, get better risk reward, and just become a better trader for you, and then share all of that knowledge with you. But for now, what I'm going to do is I'm actually going to go through my trading cheat sheet checklist, which is available for anyone who gets the Crypto Elite trading course at cryptoelite.com. And this is what I learned through years of trading. Every time I learned something really big involving crypto, I would put it into this trading cheat sheet checklist, and I eventually got it, ordered into a really good way. So I talk about, buying the rumor, selling the news. This is literally why I said Ethereum was a great buy back in July, is because I saw that the merge was coming out, and this was the first or second week in July. I was like, hey guys, the merge is coming out, and that was in the VIP. If I go here to this chat room and I type in merge, should be able to see it. But that was right at 7:10. So ETH merge news, threw this out here in case you're unaware. ETH will potentially be having its most major upgrade ever, really, either in September or October. So it's called the merge, and it's going to change Ethereum from proof of work over to proof of stake, cutting ETH's energy consumption by 99%. And it basically explained how there's multiple test nets, and Ethereum has gone through most of the test nets successfully, which is huge, right? So I was saying I think this will be a buy the rumor, sell the news event. So I will be averaging into ETH and also some other coins that work with ETH, such as Matic, leading up to the merge. And I will absolutely be selling into any major pumps, as I do not believe that we are even close to the end of the bear market. That was in 7:10. So I mean, I don't know, look at Ethereum 7:10. So that was right here. So I said, okay, I'm going to start averaging into Ethereum 7:10, June, July, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There you go. That was right here. Start averaging to Ethereum right here. Boom. Let's say, average price in the middle. That's a really solid, 52% right there. I don't know what Matic did, but July, let's see, July 10th, that was right around here, and 62%, and that's off of this right here, buy the rumor, sell the news. And so these are certain things that, like I said, I learned over the years, and I just put it in here. But of course, I always want to verify everything is good with good technical analysis. That's the main thing to always do. If you're a real trader, you got to use TA. Or I mean, I don't want to say that, because I've read books like Market Wizards where some of the people literally just use fundamental analysis. They don't even use TA, or they use TA very, very lightly. But most of the time, it's fundamental news for some traders. Most of the traders use technical analysis, and I think that having a combination of fundamental and technical analysis could lead you to amazing results. So like here, I have on my technical analysis portion, start off with the higher time frames and do a top-down analysis. So you start with the monthly, go to the weekly, go to the daily, then the 4 hours. And I was using the 4 hour, right? So this is what I do. I start on the weekly, monthly, weekly, daily, and then I go to the 4 hour. But lately, it's been more like you could get better entries on the 1 hour, and even down to the 15 minutes sometimes. But I just really don't want to do that, because I noticed, especially when things start trending, especially when things start, trending down hard or trending up hard, like here, or like here, doing those short time frames, you might get something like a 12% gain, right? But on the longer time frames, on the bigger time frames, the gain could be 100%. So maybe you get a 10%, nice day trade, and then you get another 10% day trade right here, and then you get another, say, 15% trade right here, or 20% trade right here. You might end up getting 40% or something like that, looking at the charts every day, in and out, in and out, in and out, when the reality is you literally could have just bought and held and been up 100%, So that's why I don't want to trade on the 15-minute scalping positions or even the 1 hour positions all the time. However, I think it really comes down to what's happening in the market and the certainty behind the market. So back here I'll go back to, no, I'll stick on Matic. Back here, like in even December 2020, I started getting very, very certain that we were going to see a nice bull market back around November, December 2020. So going into these longer term, higher time frames back then, and more hodl, type of deals, is really, really good back in there. Then in this area, I wasn't too sure of what was going to happen, but down here, I was fairly certain that we were going to see another pump up, which we did. So I wanted to go more into the longer term things. So maybe in this area, I'd go into those shorter term trades. And same thing when we got the drop back in November, December, like I knew that we were going to get a very, very massive drop. So I shorted the market, and it worked out really great. But then in February, March, when we started having this, and even we had this huge run up. This was very uncertain for me. I didn't know what was happening when things were going up like crazy in this bear market, because I thought we were just going to continue to see down, up, down, and then maybe up to here. And so I was like, okay, I guess that's it. I thought we were going to continue going down. So in this area, this is probably the area where I would want to have done those smaller day trades, and make say 10% here, and then maybe make this 12% short or something, or whatever, So I think the biggest lesson that I learned is know when to trade the higher time frames and know when to trade the shorter time frames. Like this whole area right here, it would have been way better to trade the shorter time frames, because this is how you end up round tripping stuff on the longer time frames, is buying here, saying you're going to sell here, but then the price doesn't do this. So anyway, what I did learn in the last 20 hours or 30 hours that I spent, watching videos and reading PDFs and papers and stuff about order blocks and all that is something pretty good, which is that you pretty much mark out the areas of interest, and then you go into them. And like I explained this, like literally in my cheat sheet right here, the top down analysis, you start down with the higher time frames and then you go lower and lower and lower. And you could go from the high time frame, right, into the low time frame. And I think a lot of people, what they do is they'll see, if I'll just replay it like this, right? They'll see something like this, okay? So they say, all right, this right here is the resistance. So if it comes back up here, I'm gonna put a short on here, and I will put my stop loss there, and I'll target here, and that's on the daily chart. And then maybe, they'll go down to the 4-hour, and if we bring this left and go like this, they'll say, okay, this looks good to me because I really shouldn't go back above here. And then if we press the play button, you can see, okay, they got in, or maybe they got in right here. But then what happens is this happens and it closes, above their stop, or maybe their stop was, let's just say that their stop was here because, this was the top, right? So it closes up here on the 4-hour and then reverses, right? So something that you could do potentially is to simply put on half of your position size, like right there, based off of the daily, or actually even going back down to the 4-hour, basing off the 4-hour, right? And saying, okay, your stop is going to be right here, right above this area, right? So that's what you would do, but you would get stopped out. So instead of like just doing that and then that's it, what you would do is you would plot this out and say, okay, this is definitely the area of interest, and this is definitely the area where I want to short. And then once we get into that area, you start looking at the candles and you start looking at the price action, even all the way down to the 1-hour chart, maybe even the 15-minute chart. And I'll go to the 1-hour because I really don't want to just like say, okay, 15-minute chart is it, right? But you start looking at it, and if you, let me see if I can bring this back a little bit, bring it back, say here, and you'll say this, okay, so this area is my area of interest, okay? This is the area where I want to short it at. And what I'm going to do is I'm going to start looking for things that will have confluence and provide me areas within this area, not back here, but within this area where I could place my stop. Okay, so in this area, this is the stop right here now. This becomes the stop. And what do we see? Well, we see on the 1-hour that within this time block, we ended up getting a move up that broke, the higher time frame and then back down. So this is essentially a swing failure pattern of this top back here. And not only did it break down, but it ended up breaking down with this candle below the, where is it? Right below this area, this right here, these lows. So this broke the market structure to the downside. So that means that this is where we want to look for shorting opportunities. So maybe you put half your position size in right here, just automatically because of the higher time frames. Now, how do you want to add to that? And where do you want to place your stop? Maybe you didn't have a stop loss, set for this position. Well, what you could do now is you could say, okay, now my stop loss is right here. And what am I going to do? I'm going to look back and I'm going to look for the candle, such as the order block for the downward candle. Or I'm going to look for the breaker, the down candle for this move. So let me just point that out. So in this case, the up candle before the down move that ended up breaking market structure is right here, right? So this is where I would want to add on to my long position. To my short position that I'm already half in from the higher time frames, but maybe I'll add more in here with my stop loss here, because this is a very bearish looking formation within this higher time frame order block or resistance level. And so you could short it here and you have your stop, your risk is defined. It's 2.55. And what you would do then is go back and say, oh, well, you know, this is the major support. So this is where I would want to do it because we're in this range. And the first take profit would probably be here. What I would probably do is this. I would take the fib from the top to the bottom, and I would have the 61.8 be my first take profit, and then I would have the, you know, previous lows be my second. I don't know if this worked out, but if I press play, we could see. Okay, so perfect. Okay, so yeah, it would have came back up. If I zoom in, it would have came back up, gotten the tagged the rest of the short position, and it wouldn't have gotten stopped out, and then it would have ended up coming down into my my big take profit. It would have gotten here first and then here. So that's you know, a pretty big trade. And this is definitely the biggest lesson that I learned. It's funny because, you know, I trade so much, but I'm still learning, and I'm still learning, as should you. Everyone should continue to strive to learn, to improve, to get better, because that's the only way that you'll keep up with literally the world. And so let me go back to this, you know, trading cheat sheet. So we got the top down analysis, right? Starting the monthly, then the weekly, then the daily, then the 4 hour. So now I'm going down to the 1 hour. And like I said, I don't really want to go below the 1 hour. Maybe sometimes I'll try out the 15-minute if I'm on a trading roll, you know, I want to scalp a lot, but I would much rather trade less and profit more, have bigger gains than, to be scalping in and out, sitting in front of my computer all day, or not sitting in front of my computer all day because I do that all day, every day, but sitting in my computer looking at the charts, just like waiting, you know? So I'll probably start going down to the 1 hour now. So I'm going to switch it up just to try to get better entries. And, you know, that worked. Like, this one worked. It doesn't always work, you know? It does not work all the time. And probably, I'm not even sure if I would have necessarily done this 100%. Maybe I would have shorted again, you know, this retest once it broke down below this area. Maybe I would have said, okay, well, if it comes back up into this area, then that's where I'm going to short and add on to my short. So maybe the RR won't be as good. Like, it wouldn't be as good in that case. But I would know exactly, you know, where my stop was going to be. And that's better than, you know, going to the 4 hour and saying, okay, well, this is where I'm going to place my stop, you know, up here. If it comes back up here, I'm going to short it. And I'm going to place my stop up here because that's where this was. Like, you get more precision when you're in it at the actual time, at the actual space where the candles are forming, you know, at that exact, you know, moment in time, pretty much. So it just gives you way better RR and better trades. And so the next thing that I do after that is I determine the market, or not the next thing I do after that. I don't even know what I was saying, but I do my top down analysis. Then I determine the market structure by you know, is the market going up? Is the market going down? I want to assume continuation. Okay. So in this case, honestly, there was no market structure. It was just literally a range. We were here's the bottom, here's the top. Like, that's it. So I don't know if you could say, I want to continue, you know, what continuation are you looking at? Unless you're saying I'm continuing to the downside, because the overall market, of course, is down, right, you know, but that's when you have to think about, you know, where are we, not just in the daily, but on the weekly time frame, you know, in this area. And on the Fibonacci from, I probably drew it on another chart, but I'll start here on the Fibonacci from the top to the bottom, 78.6. And what's happening in the macro environment. And like in this case, we had the contagion from 3AC and Celsius and so many other big players just getting liquidated and losing so much funds and having to sell off so much that basically created an ideal situation for this to be a local bottom, because everyone, you know, is freaking out and saying, oh, we can't go higher or anything like that. So that's basically why I wouldn't have thought that this was going to be a continuation lower. And unless, of course, we got a break like this, because over here, I wasn't really thinking there was going to be a continuation lower either, because, you know, it was a 30,000 super big support level, really, really, really good. But then, of course, boom, broke lower. And as soon as it broke lower, I mean, I don't know how you could trade this unless you were simply saying, okay, here's the bottom, here's the top, boom, 4-hour break right there. That right here. Let me zoom in. For this one right here, this is the break right there. This is the 4-hour candle close below the previous 4-hour candle close. So when this happened, this should have been an immediate sell. Or, of course, you look for the up candle before the down move that broke market structure, and that's right here. So then you would put your short on here and you would put your stop here. But it's like, in that case, where the hell do you even target? And I suppose you would do a target like this. So you would probably have targeted down here, you know, for some type of one-to-one move. That's how you would have played that. It only gave you one chance. It really only gave you one chance. And so that's the other thing. Sometimes I just use the daily because it's like, okay, I just want to use the daily because I want to put my trade on and like walk away. But if you just use the daily, you would not have done well. Here it is. You would not have made it, because basically here's the daily close, right? Okay, so the daily closes below that. So then what do you do in that case? Well, you wait for a retracement, and where is it gonna, you know, retrace up to before you could sell? Well, the least amount, the lowest place would be this previous low, 28,609. And it did not reach that on the daily. So the daily time frame, you would have been screwed unless I guess you use this one, but it's like that one little mistake would have cost you so much. But going down to the 4-hour, I mean, I guess you could have actually done this. Go to the daily and then see that, okay, this is the low, lower low, lower low, boom, up high. Here's the lower low, deviation below it on the daily. So as soon as it broke below here, as soon as a 4-hour closed below the daily candle, this could have been up here, your signal, like, okay, I want to get out as well. And then you could have literally just market sold. But anyway, that's all in the past. And honestly, I don't know if I would have done, I mean, I didn't do that. I wouldn't have done that because this is like such a big, nice support area, you know, lots of wicks in here. So lots of liquidity and stuff. Anyway, let's just go and do the market update, the actual market update. I'll just go through this really quickly. Draw the support and resistance levels. Very obvious. At support, don't sell. At resistance, don't buy. And this is another reason why I'm, you know, going in deeper, because, for example, this was at the support. So maybe I wouldn't have sold, like in this entire area, like I wouldn't have wanted to sell because it's at the support, you know? But as soon as it breaks the support becomes resistance. And you could see it on the 4-hour chart and even on the 1-hour chart. If I zoom here, it's just once you get this retest on the 1-hour chart, you get the retest, and then you get this break right here. This right here would have been like, okay, I'm cutting it. Like even if you bought it, even if you bought the support, you know, this support area back here on the higher time frame, as soon as we got the retest and then the failure of it and it broke down like right there, maybe even down here, yeah, time to cut it because it's just so obvious, you know? And then I guess you would just simply wait for some type of retest of here to short it again. That didn't really come, and we never really got another clean level for quite a while. And so anyway, this is pretty much something that I learned, and I wanted to share it with you guys. So I'm going to continue to go through this Crypto Elite trading cheat sheet, and then I will go into the actual charts using these different rules and the different things that are in here to plot out the levels and give my market update. Let me do that real quickly, and I will be right back and share my thoughts. Okay, so let's get into the actual report and do a big overview of everything. And, I'll share with you my thoughts. So we're starting off on the monthly on the total market cap. And if we take the Fibonacci from the bottom to the top right there, you could see that we originally got some, action at the 50% and then the 61% right here. And now we never hit the 78.6%. And it's like, that was the previous 2020, 2021 year open and close, or year high. And sorry, that was 2018. It was a 2018 year high, 2020 close, and 2021 open. And we never hit it. And we never hit that. We never hit the 78.6. I don't think that this rally will be sustained. I think we have a long ways to go. And I could see us I could see doing something, like not like that, but I could see us eventually coming all the way back down to the 78.6, making a lower low than what we have here, and possibly this being the bottom. If not, literally the 88%. I mean, the 88% is where the institutions typically invest. So I wouldn't be surprised if we see crypto fall down to the 88%. What might be surprising is that it's below $500 billion. And I think 500 billion, half a trillion might be such a big psychological number that I don't know if we would actually hit it. We might stop at like 500 billion up here. The whole thing about this though, like us stopping up here at 762 billion as the market cap, I don't really get that, because I feel like we should have went down to 730. That's just me, because even if we take the Fibonacci and we take it from here and we pretend that this wasn't, real or something like that, or that this was the bear market, even though price was going up, the Fibonacci would have been even lower. So this is just a weird place for me. Unless maybe you take it from here, from this area to the top, but then I guess that sort of makes sense. So maybe if we go to the weekly, it would serve us a little bit better. Yeah, even on the weekly, from this level down here to the top, the 38.2 is perfect. The 50% is really, really good. But then we get to the 61%, and I mean, I guess there's this, which is nice, but it doesn't really connect like totally. It doesn't, like this, the 38.2 had this nice reaction off of it, right? The 50% had these nice reactions off it. 61.8 is where the reaction mostly occurs. So I would expect something like this to have happened down here, not here. Plus we had all of this support back here as confluence, and it sort of just like went through it. And then the 78.6 is right here. So there's, confluence right here, but it's not exact at 884. So when it comes to the Fibonacci from this level, it's good at the 23, it's good at the 38, it's good at the 50, but it's not good down there. However, if we go down here, it's good at the 23. I don't know if you could really say that this is good at 38. I guess you could say this is good at 50, 61.8. I guess you could say, but not really. It's like not, I want to be super, super, super confident. Like if I saw this from here to here in 78.6, I'd be like, oh yeah, that's definitely it. But because these other ones don't line up perfectly, I can't really say for sure, I suppose one thing that I do like about this level right here is that the 78.6 lines up with these areas, but it also lines up with this area. So it's like, that makes sense. And the 61.8 lines up perfectly with this area, but we didn't really get a good reaction off it. So this might be it. And if this is it, then this would be the 88%, which has a pretty good area right here. But for the time being, I'm going with this, literally the lowest of the low to the high, low, high, and then back down. And that's what I've been doing. This area, I guess this gives a little bit more, like this area was the area before the big rally, right? So because this was the area before the big rally, it's very possible that this might be the bottom of the fib. And if that's the case, then this would be the 88% area right around here. And I would lift this up like that. And then this obviously would be the 78.6. But normally you just see wicks down to, like, normally it's like this, you know, wicks, and or even like this 38.2 wick down and then back up. So I don't know, it's difficult to say. So let's just move on to support and resistances, because I'm spending way too much time on Fibonacci. So if we look at the support and resistance levels, obviously the clearest resistance level is right there, and the support resistance is down here for the total market cap. Let's go to the daily. So personally, once we broke through this consolidation, and then we had the retest of it, like this is pretty much my game plan. Like this is my basic game plan until we reach here or until we reach the merge. I would have a long bias, because not only that, but even if you're playing level to level, you would, you know, unless we break below this level, then I would still remain in a long bias. 1, 2, 3, 4. No, that doesn't make sense. 1, 2, 3. No, it's 1, 2, 3. Yeah, it looks like ABC waves up and then 5 waves down, and maybe ABC, you know, up. I don't know, but as for now, total market cap to me, like this seems bullish to me up until here. So maybe the total market cap will continue to rise up until here before we get the spillover and, you know, possibly fall all the way back down. So total market cap seems fairly bullish to me. And if we go down to the daily and add some indicators, you could see that the EMAs did have the crossover right here on this candle. They crossed over, which, you know, is short-term bullish, at least on the daily. So unless they cross back over, you can see they crossed over on this candle to the downside, and that was very, very, very bearish. And now they crossed over bullish right here. So this is bullish for the EMAs. This is the next major resistance. We're getting closer to the resistance. We've just printed, came out of a huge consolidation and then retested it and moved higher after a huge sell-off. There's not that much capitulation left from big players like 3AC and Celsius and what was the other one? I forget, but it starts with an N. Nordic, I don't know. Anyway, yeah, I would definitely want to sell once the total market cap comes up here, but until then, I'm still fairly bullish. And plus, there's the merge. So I'm done talking about total market cap. Okay, so looking at total 2, this was my chart for total 2. Could see we hit the weekly EMA 3. So the weekly 200 week moving average, and this is the 200 week. So this is the 200 EMA, this is the 200 MA, and it looks like we hit the 200 weekly moving average pretty much on the dot before moving up. And we are coming into the weekly, resistance exponential moving averages, but I wouldn't really count them, because on the daily time frame, we obviously have, done the same thing that we did with the total market cap, which is we broke out of this range and then this consolidation, and then we broke out, hit the previous resistance, retested the previous resistance as support, and then busted through here. And now we're doing that again. So why not, if this is the new resistance, why not bust through this again, retest it, bust this again, and probably target up here. Go back to the weekly. I mean, this right here, what I would do is take the fib from the top to the bottom. So this is the 38.2 right there, and that's a huge area. So I would definitely want to sell somewhere up here. And then this is the 50. So I would probably sell everything I have if the market cap comes back up to here, to be honest. Or I guess I would sell 50% of everything that I own up here. And then if 61.8, I don't know why that was up there. It should have been right here, because this is the obvious move right here. So I would probably sell everything I have up here for sure. That's my game plan for the total 2. Some right here, like this area right here is going to be, this area is going to be a pretty big area to overcome. So let me point that out. Yeah, but we're basically at the support. I mean, we're pretty much at the support until we, get up here, and then maybe we'll do something like that. I don't know, but we'll either do something like this up here, or it'll pump all the way up here. This crypto, so it'll probably pump all the way up there, to be honest. And also look at this, like these are like bearish divergences all over here, and the price came down and then just like rocketed back up, made another bearish divergence because the price was higher but the RSI was lower, and we're still going up. I mean, seems bullish to me. Yeah, I have a bullish bias until the merge, at least. Just looking at dominance level. Let's look at the dominance levels now. So looking at looking at the dominance levels. This is, you know, altcoin dominance. Obviously, altcoin dominance is moving up like crazy. This is from a long time ago, so I guess I'll delete that. And yeah, I mean, if altcoin dominance comes up here, I'll definitely want to get out of alts here. Here, yeah. This is where I would want to take a lot of my profits. It sucks because we're not terribly far off from that. And this rally was just, I don't know. The dominance levels haven't been working very well. I mean, that worked out. No, this didn't even work out well because this was from June 10th and the markets still went down for another 2 weeks after this. So the markets were going down. The altcoins were going down in price, and yet altcoin dominance level was going up. It didn't make any sense. It was only up until around July area, you know, this area, when altcoins started to really like take off or just start to go, you know, and Ethereum started to move up. So this was really, really weird seeing altcoin dominance gain so much, and yet altcoins were just tanking during this time. Made no sense. But this level is such a big level that if it does hit there, I would take my profits on altcoins. Then we have Bitcoin dominance, which is the inverse, and you know, same thing. I would de-risk if it comes down to this level. So now we have that. We could look at Bitcoin, and all right, so I drew this thing right here, 395 days. That's the possible length of the market cycle based on previous lengths from tops to bottoms. And obviously you can't really see anything, but this is December 1st. So it would be right here. So maybe we have an up month and then 2 down months, and then that would be the bottom, and then up in September, down in October, down in November, and then, or maybe down in November, but a big wick, and then December, and then we just resume the bull market December 2022. You know, that's a possibility for sure. That's that. Going to the weekly, this is the Bitcoin chart on the weekly. Let's see what levels I drew out here. Oh, this is why this is so marked up. It's because I was using this chart as something to do for an educational video that I was making. Get rid of all this. Okay, cool. So got rid of all of that. This right here is the longing area for where we are now. So this, actually, let me go to the daily. 1 second. Okay, so I cleaned up a few things. First thing that we notice is that on Bitcoin, we went below the 200 weekly moving average, and we stayed below the 200 weekly moving average for quite a while. This is usually the indication of like we're in a very, very severe bear market. Like it usually never falls under here. And if it does fall under here, it's usually a wick and then it pops right back up. But we closed it and we kept on going down. So that was really bad. Now that we're above it, you could say that that's a good thing. Here's another good thing is that we have this low right here is right there on the MACD. And now obviously we have this low, which is right here on this MACD. So this had a really, really, really big weekly bullish divergence. And well, actually even right here, there was a huge weekly bullish divergence, and you know, that went down. So normally those things play out really well, but that one didn't. This one seems to be. Just looking at this, we have all of these levels, you know, plotted out, the yearly open and close, for 2017, 2018. And we came so close for the total market back to this level, but not really for this level, not really for Bitcoin. Let me see if I could figure something out on the weekly time frame when it comes to the Fibonacci. Yeah, couldn't really find too much on the weekly Fibonacci. So let me go down to the daily, plot out the levels, and maybe if I use a different chart, it'd be easier. Okay, so yeah, like 20,000, third major support right there. That was just over the previous all-time high. So this was the solid level to buy for sure, obviously in hindsight. But let's see. any good levels? All right, well, here's a good level on the weekly. Go down to the daily, take the Fibonacci from here to here, origin of the move down to the bottom. So yeah, this is the 61.8. So this is where I would want to take all profit and just like exit the market. And honestly, I mean, high, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, maybe down here. So higher high, consecutive higher highs and consecutive higher lows is bullish. That's what we're doing right now. And so I actually just changed this. I said, take profits here because we're going to get a reject. We're most likely going to get a rejection here, but could get a pullback to another move up to this area, to the 78.6, and this would be the area. And this is a huge area, huge major support zone, big yearly open and close. So right around here, I'd probably just like exit the markets. I would probably start shorting the markets here and short it all the way up to 31 or 32. And because I think that we're going to come back down. I don't think that this was the bottom, but I do see us, continuing to move higher. This is bullish indication, like this indicator, these indicators are bullish. Yeah. Plus we had this bottom top 61.8, boom. So you could take it from the bottom to the top of the first wave, bottom to top of the second wave. So right there, 22,225 basically. Then we go down to the 4 hour, see if there's any better indications there of price action. And so yeah, this area would be the area once it hits here that I'd really want to start looking for certain bullish formations. Like maybe we do this, like as soon as we do that, like I would enter here, stop loss here, and target up here as my first target, and then all the way up here as my second target. So that would be the first area. And then my second area, if that doesn't work out, if I don't get like a really good entry or if I get stopped out there, then my second area would be, down here. And that's this right here. That would be this play. But my first area that I would want to look at would be the 61.8 of this move, which is right there. And so I could, enter partial position right here and then dig into the 1 hour chart once it hits and determine whether I want to stay in my position or where I'm going to put my stop or what's going to happen. Okay, so that's Bitcoin. Now I think we should go to Ethereum though, because Ethereum is probably going to do way better than Bitcoin considering that all the news is around Ethereum. So let's go to Ethereum now. And Ethereum, very, very important. I noted out some dates. On August 11th, that is when the last public testnet to run through the merge transition should happen. So like I said, there's a lot of testnets. Go early is the last one. And if this testnet gets completed and it's a-okay and there's no hiccups, I honestly feel like that will create a surge in Ethereum's price. In fact, the hype around Ethereum is so strong that you could see we didn't get the retest like how we got with Bitcoin. So with Ethereum, it literally it ran up so significantly. First, it ran up to here. So you would think, okay, buy at the 61.8, because if you look at Bitcoin, if I go back to whatever, I'll just make it right here. If you go back here and you say, okay, from the bottom to the top of the breakout, 61.8, boom, that's what you want. I had that, but what I mostly had was Ethereum from the bottom of the move of the range to the top of the breakout. I said, okay, definitely get into the 61.8. And honestly, maybe even the 38. The 38.2 was actually where I said for Ethereum, because I knew, I was like, there's so much hype around Ethereum. So get in at least at the 38.2. And it didn't even come back to the 38.2. This is how different Bitcoin and Ethereum are. Bitcoin went all the way back down here after the breakout. Ethereum just literally 23.6, boom, even more. So then you take it from the low to the high. And I mean, at that point, the 61.8 looks really nice because this lines up with the previous resistance, but it ended up being at the 38.2. When this happened, I should have probably, like after this big move, I probably should have taken the Fibonacci and said, okay, I'm going to look at the 38.2 and then set alerts. And then once it hits, I'll go down into the lower time frames and I will check to see like what's happening. So actually it ended up hitting the 50. Can you see that on the, hold on a second. Why on the 4 hour Fibonacci bottom 1665 and it did not hit the 50 on the 4 hour, but then you go to the 1 hour. Is this a different Fibonacci? Oh yeah, here it is. Then that's a different Fibonacci. I'm sorry. That's a different part of the graph. This is the chart. This is the chart I was looking at. So I would have taken this from here to here. Okay. And then marked out the 38.2. This would have been my very first level. And I would have probably just like monitored this, although it's like you can't monitor things 24/7 because that's crazy. But I would have seen this wick and then I would have said, okay, I'm gonna get in right here on the retest. Probably would have gotten in right here on the retest, and I would have been stopped out on this trade because it came all the way down here. That's a pretty steep curve, you know, it's well below the 38.2 and also below this entire area. So I would have been stopped out. But once this big market structure shift happened to the upside on the 1 hour chart, maybe even, I mean, like I said, I don't want to use the 15-minute chart, but it looks like the 15-minute chart is really what is happening a lot. Yeah, because on the 15-minute chart, you could have seen that this 38.2 right there, you know, and it popped up above it. So as soon as it popped up back above this area, then I would have said, okay, this is the down move before the pop up, and this would have given me the RR, like the entry and my stop, exactly, you know, where I want my stop and my target, because in the higher time frame, on the 4 hour time frame, I'm thinking it's gonna, you know, keep on going up. It should continue to go up. So on the higher time frame, I probably would have wanted to target, you know, the previous highs up here. And that's a fucking 9 point. Look at the RR on that. That's insane. That's crazy. So this is exactly what I mentioned in the beginning, doing stuff like this, you know, waiting. Even if I was on the 1 hour, let's say I was on the 1 hour, I would look at the 38.2. This would be the area that I'd say, all right, I'm going to keep an eye out at this area. Maybe I would have put in a small position right here originally without a stop loss, and then simply just monitored it. And as soon as this candle closed below it, I probably would have just taken the L on that. But then once I saw this huge, like on the 1 hour chart, like this is a huge thing, this huge candle, I would have wanted to get back in. However, here's the issue with these two huge candles on the 1 hour chart. Where would you want to enter? Like realistically, like looking at it, well, you'd want to enter right here at the top, basically at the top of this box, at the top of this wick. And, you know, you wouldn't have gotten that. So that makes things super frustrating. So what you can do is, if you think that there's going to be a really, really, really big move, I don't know why when I switch charts, it has to, you know, mess up like this and just go to some random place. You could take it from the bottom to the top, 38.2. Did it even reach the 38.2? Did it go back there? Not in the 4 hour. It didn't do it in the 4 hour. But let's say you're monitoring the 4 hour, and this is on the 4 hour chart. Once it broke here, this would have been where you would have gotten in, where you would have wanted to get in. But obviously it did not come back down there. So, and then it ended up breaking even above there. So at that point, what you would want to do is you would want to get in at the top of here, right there, with the stop loss here. So even if you did that, I wonder what the RR would have been. So let's just pretend that we did that. Target the highs, stop loss right there. That's why this strategy is good, because it gives you insane risk to reward. You don't hit it a lot, or at least I don't hit it a lot. Other people tend to hit it a lot, but you would have hit it here, and that would have done so well. So this is definitely something that I'm going to be implementing in my strategy. Absolutely. Okay, and so looking at that, let's go back to the daily, right? And like I said, on the daily chart, we broke out of this range. You know, we never even actually hit the bottom again, which is like what I really wanted to come back down here, sweep this really quickly, and then zoom up. I knew we were going to zoom up, but we only got close. We never hit 995 again. We never hit this price again. See, you could see here and here. So, and also I'm using Bitfinex charts for Ethereum. What about Coinbase? I feel like I should be using Coinbase charts because I feel like Coinbase is like, now that BlackRock is partnering up with Coinbase, that is so significant that I would much rather use Coinbase's chart. So this was 993, but yeah, no, it never hit it. The low was 997. So never got back to the previous lows. And this was going to be the areas, like it hits this area. Okay, now look for catalysts, look for things on the lower time frames that show confluence of, you know, moving up. This one moved up beforehand, and I wouldn't, like, technically this moved up, sure, and it broke the market structure to the upside near the support. So you could have gotten in right here, but it coulda, shoulda, woulda. I would rather wait for something that makes a little bit more sense to me. So let's look at where we are right now. That's the important part, right? Where we are right now, this is crazy bullish. Like, look at that. So top to the bottom, bottom to top for the fib, 61.8 is right here. 78.6 is down there. I was hoping we were going to get to the 78.6. I'm not sure if we're even going to get to that. I feel like Ethereum is pretty damn bullish, but I don't want to jump into things, you know, too crazy. Like, all that we know right now is that here's the crazy day. This is the daily. So this is the daily. So this is a very, very big resistance on the daily, right? Tricked everyone. Sorry, I got distracted there. I got a phone call, but what I was saying was that on the daily, there was a lot of resistance right here. So this is a major resistance level. This is a major resistance level. And we broke out of this huge consolidation, which means that we are in an uptrend. So I would look for pullbacks. The first pullback that I would look for on the daily time chart would have been right here. Of course, we did not get that. And not only would have been, it actually wouldn't have been there. Like I mentioned, it would have been the 61.8 right there. We didn't even get that. Then, or the 30.2, we didn't even get that. The first one would have been right here. Anyway, the next one that we saw on the daily chart was we saw a down move before the up, which broke market structure. So this would have been the second area to look for longs on the daily chart. So then we would go down to the 4-hour chart and look to see if anything happened there, and then maybe the 1-hour chart and look to see if anything, you know, would have happened there. And also you could do that. What you could do is actually 1, 2, 3, 4, 5. I would actually look for confluence around the 38.2. So the first thing that, you know, that you could have done, I guess, if you saw this candle and that was it, was look, okay, here's the order block, and now and this is a 38.2, so it lines up fairly easily. Then you go down to the 4-hour and you sort of just wait. And I guess right here, this was the high. This was the original high. And then we had a lot of resistance right here. It broke above it and then down below it. So that should have triggered a short sell right here with a stop loss above here, which of course would have been stopped out right there. Then though, when this fell down and this fell below the previous, you know, the highs, that would have signaled another short sell right here. So you could have either market shorted it right here with a stop above here, or you could have said, okay, this is going to be the area where I'm going to look for shorts on the lower time frames, and then you go down to the 1-hour time frame and you look for short positions, and maybe right there, this, and then of course this giant wick this is another reason though. This is why I use stop loss timeouts. Honestly, I feel like if I go down, yeah, see the 15 minute is too short for me, because the 15 minute would have gotten stopped out on the 1 hour. On the 1 hour right here, this wouldn't have stopped me out, because I'd have a stop loss timeout of 1 hour, and then you would target. So you would have gotten in, and the actual trade would have been right, 4-hour chart. Looking on the 4-hour chart over here, where is it? Here it is. Boom, above it, break back below the support area. So then you could market short right here and then stop above here. That would have gotten stopped out. But then once this happened, back above and then break back below, even that wouldn't have been a good one. what did I see it on the daily chart and just not recognize this? I mean, the daily chart, no, the daily chart is, you're screwed on the daily chart because this wouldn't have been able to tell you anything. So on the 1 hour chart, it would have had to have been on the 1 hour chart, like this wick right here on the 1 hour chart, rising above here, stopping everyone out and then coming back down. That's technically the area, because even right here, this is the swing. This is a like the swing top, and this is the swing top, the major swing top. This is a major swing top. I mean, first this was the major swing top, and then this happened, and so we would have shorted this and, you know, targeted down here. That wouldn't have worked out. Then we had this major swing above here, breaks down. We would have targeted down here, you know, or we would have I probably would have targeted down here. So I would have got stopped out right here. But as soon as this happened, boom, target right here. So even if we lost, let me just check this real quick. Even if we lost, say 5%, okay, so you're down 5%, and then let's say you're down 10%. Let's say you lose 2 trades and you're down 10%. Well, you did this, you'd be up 13.5. So you'd be just over break even. I don't know if that's really worth it, to be honest, to be up about 3%. You'd be up about 3%. Either way. Anyway, then of course you would look for longs. But the thing is, I wouldn't really want to be looking for shorts in this area. I would much rather be looking for longs in this area because of the fact that, you know, we broke out of this huge consolidation. Like, you got to know when to look for longs versus when to look for shorts. And I guess the EMAs are indicative as well. So anyway, going back to the daily, you can see this is obviously a huge level. So what should you do? Mark out this level and then go to the smaller time frames. Did something happen here? Well, I mean, technically you could like put on a position, you know, could, like, once we started coming down, put on a position like this and then just go in, no, like, I don't want to say without a stop, but like small position. And then once you see something happening, then you go in. So in this case, we would have had this move to the upside right here, which broke this market structure. And then you would get in, at this breaker order block right here, with a stop going below there. And you would have targeted up here, still 4.7 hour trade. That's what would have happened right now. That's what would have happened right now. It's like, obviously, look, we're coming into this bigger resistance area. Okay, I wouldn't mark that out. We're coming into this big resistance area up here, and I don't want to short. I would rather wait for pullbacks to long. I would much rather wait for pullbacks to long. So fingers crossed that we get the pullback into here, because you could also actually take it from this bottom to this top, 61.8. There you go. And say I'm going to try to long in this area. I like that too, because this lines up with this. So this one right here is the 51. It's the 50%, right? I don't like the 50%. We've been seeing a lot of the 50% marks get hit, but personally, the 61.8 is wildly more accurate, wildly more successful. So I would much rather aim for the 61.8, try to get in. I also like 1500. I think 1500 is a psychological number, and plus it's support area down here. So personally, I would want to look for longs around this area if I can. That's the daily chart. Looking on the 4 hour chart, it's pretty, I mean, yeah, it's pretty similar. Maybe I'll bring it down here and say, you know, this entire area over here is the 61.8. That would be looking at, and this is where I would want to get in. Maybe lower this just a tad. But yeah, I would do this, and this would be my take profit 1. This, and it's like, where do you put your stop? Well, this is the thing that I used to do, was like stop goes under there, because you have you're getting the 61.8, or actually I usually put my stops underneath the 78.6. But now, once this area gets reached, that's when I'll look on the lower time frames, see if there's something that gets set up, and then go in. Maybe the stop ends up being like this, because the price comes down. The price comes down, does something like this. Okay, boom. I know I entered here, or I'm entering here. Now I know this trade is invalidated if it goes back under here, so I could keep a stop like that. I could also check the RSI and stochastic RSI. Maybe they're in the oversold territory, which would be even more confluence. Maybe I could check the MACD and it's underneath the midline and start going up, which is even more confluence. You know, there's a bunch of stuff that I could look at, but but this area is the area that I would really like to see us move up, and then I would go back to the higher time frames, and my bias is up, so I would say 1725, or no, I would say 1780 is T1. Look at the daily. Where's the daily at? And then honestly right here this would be T2, 1960. And then finally, I was on Ethereum, right? But now I'm going to Ethereum against Bitcoin. Look at the weekly chart. So this is a huge trend line, bumping into it. We're getting awfully close, like to this, where is it? Right here, this order block that has the potential anywhere within here, on the weekly time frame to go down and reverse. Getting a little scary, but I could totally, I don't know. I don't believe that it will. I think that it will bust through here. Honestly, I think that it's going to bust through here, and I think that it's going to go maybe even all the way up to the all-time highs again. Let me see. Give me 1 second. Sorry, not all-time highs. What am I talking about? But to the 61.8. Here's the 61.8 from this top from February 2018 down to the bottom of September 2019, all the way back up to the 61.8. Like this right here. This is the golden ratio. This is actually how I knew to get out in December, how I knew to sell a lot of my Ethereum back in December, whenever October, November, December, somewhere around here, I guess, $3,800 to $4,000 is because the Ethereum versus Bitcoin chart, huge time frame on the big time frame. It hit the golden ratio, and like it always goes down from there. That was probably my biggest indicator. And now we are, we're coming back into it, and so I think that we're gonna hit it again. I think we're gonna hit it again. I think the merge is powerful enough to bust through this trend line one more time. But after that, I could see it. I think it's gonna do this. Like, I don't know, whatever happens like that, but I think it's gonna eventually go back down, and it'll probably end up doing this, something like this. Draw this out. I could see it doing, something like this. So that's what I think is probably going to happen with Ethereum against Bitcoin. I would bet that Ethereum is going to outperform Bitcoin. Then we go to stocks. If we go to stocks, we could see that the NASDAQ came up on the weekly, busted through the weekly resistance, and it's been staying above it. It retested it, even on the daily, busted through the daily resistance, and then retested it and went higher. So bullish for the NASDAQ. Nothing makes sense. This area is where I would want to really definitely short it. Also, where I would really want to long it would be if you look on the weekly, just taking the Fibonacci from the bottom to the top. I would love to long it at the 61.8. This area where we reversed from makes no sense to me, because it literally, like, it makes a little sense. Like, obviously there was this previous cluster right here, but this area was very easy because it was a 38.2. So yeah, okay, it reverses from 38.2 and then moves up. And even this area, like, it stopped right here and moved up a little bit, 23.6, sure. And then the 50% stopped right here, moved up, and then crashed below it, but then moved up again. Like, this doesn't really make sense to me. Like, it would have made a lot more sense to continue down to here and then create something like this and then move up from there. So I think that this is hot air. I don't know. Hot air could go all the way up there. I don't know. Regardless, I'm not long-term bullish right now. Like, I still think that we are going to hit there. Same thing for stocks, for the S&P 500. So on the weekly time frame, we hit the 200 exponential moving average, but it's not like we hit the 200 weekly moving average. And if you take the Fibonacci from the bottom to the top, sort of the same thing. The 38.2 was easy. The 23.6 was easy. The 50% haven't even reached the 50%. 61.8 is all the way down here. Stocks on an average downturn go like, I think 30% right around here. This one only went down 25%, 24%. So it didn't really go down as much as it normally does, which is weird. Plus they're going to take off a lot. They're going to take out a lot of money out of the system. Like, look at this, freaking crazy. Where is this? Oh, let me hold on so I can jump to present. So this is huge. It says, commencing in September, the Fed will withdraw up to $2.2 million out of the market per minute. So that's bullish on USD, bearish on risk assets. Quantitative tightening of 2000 2018 was at $50 billion per month, or $1.15 million per minute. That caused the S&P 500 to lose almost 14% of its value over the course of 3 months. From September 2022, the Fed moves at double the pace of 2018. So yeah, it obviously caused a huge downturn in the S&P 500. So I feel like it's going to do that again. That will become September. That'll be in 1 month. So we have 1 month. And you know what? That lines up with the merge, and it lines up with other things. So yeah, I could see us going up until that happens, and then we start going down again. And finally, there's one more coin that I want to look at, which is freaking BNB, Binance coin, going on an absolute freaking tear. Look at how insane. Look at how insane this is. Like, this is no longer, I had this as the support after this. So upset that it never reached here. But yeah, like, this is literally, and then I sold here, but kept on going. So the BNB, I don't know what's happening with BNB, but something is happening with BNB. I think the stock market is going to list Binance on the as a ticker symbol or something. I don't know what's going to happen, but something is clearly happening, because this is Binance coin against Bitcoin. I wonder what, okay, so against USD, against the dollar, it's rallying super crazy hard. It's not where it was before. I don't know. I think Binance coin, BNB, I think this might be a good buy, maybe a good long-term hold buy or something, because it's just, I don't know. I have a gut feeling. I have a serious gut feeling about it. And I think that something big is gonna happen with it. So this is 179. So let me go down to like 180. It never reached the 78.6. So disappointing, because that of course was the buy zone. And so actually this is more like it. So it never reached that. But I don't know, because I think it's gonna come back down. It usually comes back down. I don't know. I probably wouldn't buy it like right this second, definitely not on the weekly, maybe on the daily. Go to the daily, look for different time frame, look for things on the daily. Where is it? Here it is. Boom. All right. So there's a clear uptrend. So if it hits this trend line, that's a buy. And other than that, this is a clear resistant, support, break hard, never retest it. So I would probably want to sell here, buy here for BNB. I'd probably do this, sell, buy. Anyway, that's BNB. It's just outperforming everybody, doing really well. This is BNB against Ethereum. What about, imagine buying like BNB instead of Ethereum. You'd be up so much. Anyway, that's the last thing. I think BNB is a good buy. I would look into it. There's also GMX, but this is on CoinEx. I don't know, it's going crazy, but I don't know how to buy it on, it's not available. It's not like it's available unless you actually go into, CoinEx or Trader Joe or Uniswap. So it's not like a big thing that I'm buying. Anyway, that's pretty much it. The only other thing is Solana, and Solana, I don't know if it had this FUD and it only went down a little bit. Like, it should have went down way more. So I'm waiting for Solana. I would love for Solana to get to 22. I feel like there's a lot of liquidity down there. And yeah, I think that's it. So I'm going to end it here. Hopefully this was informative. Hopefully you learned something. I'm going to try to make more videos, and I will talk to y'all later, I guess. All right. Bye.